Last week was a setback for sterling, following the previous week's positive run. The central banks have made it very clear they are operating with a data-driven approach, and therefore, the market will react in tandem. The US inflation figures printed higher than anticipated, with the core CPI figure showing a 0.4% rise on the month versus the 0.3% forecast. This gave the dollar a considerable drive against its peers. This was most noteworthy against the pound, as pound sterling to US dollar fell by over 1% during the week. The US Federal Reserve have now stated that they are in no hurry to cut interest rates in response to the inflation figures. Their priority is to maintain the 2% inflation target and not act upon impulse at the first positive signs. In terms of noteworthy market moves, pound sterling to US dollar dropped by over 1% during last week's trading, seeing the pair head back towards 1.27 and offering an opportunity for dollar sellers. Pound sterling to euro has fallen by 0.5% in favor of euro sellers. Again, this is due to market reactions to the ever-changing rate expectations for 2024. The dollar also managed to claw back over 0.5% against the euro, with the pair currently trading just under the 1.09 handle. We have a very important week ahead, with key central bank meetings taking place. Tomorrow, the Bank of Japan is expected to announce its first rate hike since 2007, as it has seen stronger inflation and wage growth recently. The US Fed will host their policy update on Wednesday. Whilst no changes are expected, their commentary will certainly draw attention. Then finally, the Bank of England meets on Thursday. Again, no changes are expected, but the market will keep its ear to the ground for further guidance. Also worth noting, the UK CPI inflation figures will be released on Wednesday morning ahead of the next BOE update. We also have a spread of PMI data from the US, UK, and Europe, as well as UK retail sales data on Friday.